China and the United States have both agreed to slash reciprocal tariffs on each other and to commit to trade talks in a new development that has perked up markets and assuaged fears of a global economic slowdown. For 90 days, from May 14, the US will effectively cut tariffs on imports from China to 30% from 145%, while China will reduce tariffs on US goods to 10% from 125%. Following the agreement, US President Donald Trump said he would likely speak to Chinese leader Xi Jinping later this week. And for this situation, we're going to understand the impact of tariffs cut on the global market. I'll welcome you. Our guest ready on the line is David Stappard, Country Director, Singapore, the Zanshira and Associates. I want to say thank you very much, David, for joining me. Firstly, we want to take a look at the implications for the global markets. How do you see this temporary relief impact international markets, particularly in Asia?
Thank you for having me, Nina. Yeah, that's an excellent question. I believe markets are relieved, and you can also see this play out across the world, whether that's US markets or markets here in Asia. Investors are reacting positive to the news that the tariffs are reduced. Here we see the United States and China taking a step back. They are willing to negotiate. That's positive. However, we need to acknowledge that the tariff announcement, still 30% imposed by the US on Chinese goods and 10% imposed by China on US goods, is still the highest tariff level we had in the last 100 years. So while it is definitely a positive sign that these countries are talking and that they came to a tariff pause for 90 days, it's still not as good as trade relations were just in January before Trump took office, for example. So while it is a positive development and hopefully there will be more announcements and more steps taken to normalize trade, we are not at where we were at the beginning of this year. And there's a few other things. So, of course, tariffs will continue. And uncertainty will continue because this is just a temporary tariff pause, right? 90 days. What happens after that? Trump already spoke about his willingness to raise tariffs again, probably not to 145%. I think he was floating 80%. So there's still a lot of uncertainty. There's the potential for this to escalate again. And that is in general bad for business because businesses cannot plan, right? So if you don't know where tariffs will be in 90 days, you may not make large ordering decisions or purchasing decisions or investments in other countries to, let's say, build your factory because the uncertainty currently is too high for this. So while this is a positive announcement, and it's great to see that the two largest economies in the world are talking with each other, there remains uncertainty, which will in general be a dampener on global markets and the global economy.
We understand this is temporary true stability for the currency markets, especially for emerging economies. We want to take a look, as you mentioned, David, we're going to continue with uncertainty even though with the pause tariffs. So what sectors are expected to benefit the most from this tariff relief and which might still face challenges?
Good question. So in general, when you look at the trade between the United States and China, there's a lot of manufacturing, of course, done in China and then exported to the US. Large US companies are manufacturing in China. So, for example, Apple. If we take Apple as an example, they said they would try to manufacture as many phones as possible in India for the US market, but that may not be possible because the production capacity is not there, right? So there will be somewhat of a relief that tariffs are now lower. So we would probably also see some exports from China to the US here. In general, you would see a lot of front loading, right? So while there's a tariff pause, companies will probably want to take advantage of this. And if they have to import products, then they would do it now because we don't know what happens in 90 days, right? Before there's a potential rise in tariffs again, they may front load goods right now. Then on the other hand, for China, for example, 10% tariffs are still manageable, right? So You would expect airplanes to be delivered again. I think everybody saw the news stories that China was returning Boeing planes because the tariffs are too high, right? We would assume that these deliveries go ahead, for example. So again, very much temporary. So we wouldn't expect large investment decisions. But of course, a lot of front loading for things that currently at 145% have stopped.
And David, we're going to take a look at what could this mean for the US-China relations moving forwards. Does this signal a potential long-term de-escalation, or is it just a temporary pause in trade tensions?
Yes, so I think it would definitely signal a willingness to de-escalate on both sides, because this agreement was reached quite quickly, actually. There were concessions on both sides, and it shows that both countries are not interested in an escalation and unsustainably high tariffs. When the tariff rate was at 145%, that basically was a trade embargo, because at that price point, like it didn't make sense for these two economies to trade with each other. So we saw a step back here. We saw a willingness from the Trump administration to lower these tariffs and come to terms with China, and then of course also from the Chinese to discuss and bring the temperature down in these talks. So that is definitely positive, and that shows that there's a willingness to negotiate. Where that will lead in the next 90 days, we have to see. I know that usually trade agreements will take longer than 90 days to work out. Like it's usually quite complex, and on a technical level, a lot of things have to be discussed. So I don't think 90 days is enough for that. So we will have to see what happens in the next 90 days. The situation is fluid, and things can change, usually with a tweet by Donald Trump, who says, oh, okay, so we will do this or that. So uncertainty may return over the next couple of weeks, but the first signals that these countries are talking, that they are willing to come to terms in agreements, is a very important positive sign.
Mm-hmm. And David, definitely from this, we want to take a look at the opportunities for Malaysia and even ASEAN, especially openings for regional economies to capitalize on this window. As you mentioned, readjusting tariff or working on this tariff probably need more than 90 days, as there's a complexity structure within it, and we have to take a look at different countries, different standards, different rules. So how should regional governments position themselves to maximize gain during this 90-day period?
So, like I said before, for any major decisions, right, like moving factories from China to other countries like Malaysia or Vietnam, there is not enough substance here, right? Because you wouldn't know what happens after those 90 days. And usually these investment decisions, they take longer. They take years to finally come to fruition. So we wouldn't expect large investment decisions unless there's more certainty, of course. But in the meantime, I think there's some learnings we can take away from what's happening here. So last week, the US also announced a trade deal with the United Kingdom. And I think that was very interesting because it was the first trade deal that mentioned some numbers. So for example, the US did not get rid of the 10% baseline tariff. So we are probably looking at a future where even if you reach a trade agreement with the United States, tariffs would be locked in at around 10%. So that's still worse than it was just at the beginning of the year. So in that sense, this is probably something companies and consumers will have to absorb. So we would definitely deal with higher tariffs that will have an impact on growth and of course on trade. So what can economies in ASEAN do, and particularly Malaysia? I think what we will see is a lot of front loading again, while these 10% tariffs are in place, and while trade agreements are trying to be reached. Once you have an agreement, there's a little bit more certainty because you would assume that both parties will adhere to the terms of these agreements. And that then would probably facilitate a better investment climate. Although, again, we're probably looking at a 10% floor for tariffs. Now, if that's the case, then ASEAN and particularly Malaysia would still be a great manufacturing base for the US, because these tariffs, 10%, are lower than what we currently see on China, which is 30% by the US. So just with that reasoning and the numbers we have right now, we would expect a China plus one strategy, diversification to other production locations to continue, as it has during Trump's first trade war, during his first presidency, and we would expect ASEAN to be a net beneficiary. Although, again, I have to emphasize that a 10% baseline tariffs will have a dampening effect on the global economy, on US demand, of course, and it's going to raise prices for consumers, and that needs to be compensated, right? Like, so consumers will pay more, probably producers will try to absorb some of the cost here. So it's not as good as we had, like, just in January.